Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
European market pulse. Trade tensions overshadow improving business sentiment. The past week proved to be a challenging period for European equity markets as investors grappled with a resurgence of trade-related anxieties and geopolitical friction. The Pan-European Stocks Europe 600 index retreated by 0.98% in local currency terms, reflecting a broader risk-off sentiment that permeated the continent's major trading floors. This downward trend was particularly pronounced in the Mediterranean and Central European hubs. Italy's FTSE MIB led the decline with a sharp 2.11% drop, while Germany's DAX and France's CAC 40 followed suit, shedding 1.57% and 1.40% respectively. Across the Channel, the UK's FTSE 100 showed relatively more resilience, but still ended the week in negative territory, down 0.90%. Interestingly, this equity market contraction occurred against a backdrop of surprisingly resilient business activity. Flash PMI data for January indicated that the Eurozone remains in expansionary territory, with the HCOB Flash Eurozone Composite PMI holding steady at 51.5. A notable surge in new orders has propelled business optimism to its highest level in 20 months, suggesting that while equity prices are volatile, the real economy is finding its footing. The UK mirrored this optimism in its private sector, where the preliminary composite PMI reached a 21-month high of 53.9, pointing toward robust quarterly GDP growth despite the broader market gloom. However, the UK's internal economic picture remains complex and characterized by a decoupling of activity and labour health. The unemployment rate reached a 5-year peak of 5.1% in the 3 months ending November, with the hospitality and retail sectors bearing the brunt of the weakness, while wage growth is cooling, reaching its lowest level since late 2020. Inflation unexpectedly accelerated to 3.4% in December, driven by volatile components like airfares. This presents a delicate balancing act for the Bank of England, which still expects a return to the 2% target by late spring. In the Nordic region, Norway's Norges Bank maintained a steady hand, keeping interest rates at 4.0%, while affirming that cuts are likely as the year progresses. Meanwhile, the geopolitical landscape faced a new hurdle as the European Parliament voted to seek a legal opinion on the Mercosur trade agreement. This move introduces significant bureaucratic delay to the South American trade deal, reinforcing the geopolitical uncertainty that contributed to the week's lackluster equity performance. Now our insight into alternative markets, resilience and consolidation. The new frontier of private equity and mental health for 2026. While geopolitical uncertainty continues to weigh on European equity indices, the private equity (PE) landscape is demonstrating a clear preference for defensive sectors with high structural growth potential, with mental and behavioral health emerging as a primary protagonist of investment strategies for 2026. This interest is far from accidental. It is rooted in exceptionally attractive long-term growth rates, fueled by heightened global awareness in the post-pandemic era and an increase in reimbursement rates from both public entities and private insurers. The trend we are observing is a strategic shift from fragmented service management toward large-scale platform models, where private capital acts as a catalyst for integrating clinical, pharmaceutical, and educational services. Recent activity in the sector confirms the validity of this trend through high-profile operations involving major market players. For instance, firms like LDC in the UK have already begun positioning themselves by investing in entities such as the B Group, aiming to support their expansion in an increasingly demanding mental support market. In parallel, Industry giants like the Carlyle Group are focusing their attention on niche but essential segments, as evidenced by their acquisition of Terrytown ExpoCare Pharmacy, a long-term care pharmacy dedicated exclusively to serving communities with intellectual and developmental disabilities. These maneuvers highlight that private equity is no longer just seeking to provide care services, but is aiming to control the entire value chain, including specialized pharmaceutical logistics. Looking ahead through 2026, we anticipate that the buy and build model will become even more sophisticated. A textbook case is represented by Arc Health, backed by Thurston Group, which has successfully created a network of over 90 locations through targeted acquisitions like that of Clarity Counseling Center. This approach allows for the optimization of operating costs while delivering uniform standards of care on a vast scale. Furthermore, the expansion of private equity's reach into professional training, highlighted by Level Education Group's acquisition of Triad, suggests that investors are also betting on the quality and availability of specialized personnel, a critical element for sustaining the sector's future growth. Ultimately, private equity in 2026 will not merely provide capital. It will be the industrial engine of a transformation that aims to make mental health services more accessible, structured, and prepared to meet a rising global demand.
Thank you for listening to this episode of T-Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.